Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. So, a couple of things to be aware of as far as where we are right now. Obviously, if you've been watching the market, you've seen in the last week it took quite a bit of a dive the last week on all the indices. This is the S&P 500, dropped a few percentage points. The NASDAQ looks the same. They all look about the same. The Russell looks roughly the same. And the bond market really has been annihilated over the last kind of month and a half. But the other thing to know is we're going into earnings season. When it comes to earnings season, unless we're specifically making earnings trades, and we will make a couple of those when the season hits, we don't like to trade stocks where the earnings falls within our expiration cycle. And at this stage, almost every stock in the market is going to be having earnings over the next kind of month and a half or so. So it's going to be hard to find stocks that aren't going to have earnings in the way, which means we're going to stick to things like ETFs, exchange traded funds, which is what these are. TLT, SPY, they're kind of index kind of funds. So they have more than one stock in them, which means they're a lot less volatile than the market because S&P 500, like the SPY here, this ETF has 500 stocks, S&P 500 built into it. So obviously 500 stocks, when you average them out, they're going to be a lot less volatile than trying to pick one or two random stocks inside them. So that's the other reason we're going to look to trade indices over the next few weeks before we make a couple of earnings trades once earnings hits big time. So last week we made a trade in the NASDAQ because volatility had spiked more than the other indices. This week what we're going to do is we're going to go to the bond market because, as you can see, the bond market has been kind of tanking for the last, like I said, roughly a month and a half, and volatility is fairly high, not huge, but high enough for us considering the bond market never really gets super volatile. So what we're going to do is we're going to do an iron condor like we always do, but we're going to skew it to the upside, which means, as you can see, this is about the lowest it's been in the last year. So we're going to set a trade that has more, let's say, room to the upside, because we're going to bet that it kind of keeps going down a bit, but probably bottoms out hopefully sometime soon and then kind of heads back up and maybe bounces around. That's our assumption. It could go down for the next 6 months. We don't know for sure, but we have to make an assumption at some point, and that's the assumption we're going to make. So if we go to the trade page, we're going to use right here the 40-day option chain. Now I know 47 is closer to 45, but when it comes to the TLT, and these are things you have to be aware of the more you trade, TLT is not the most liquid of trading indices. So the monthly expiration cycle, the standard expiration cycle, is going to have much better liquidity, which means we're going to get a much better price. So we'll give up those 6 days. Tomorrow this will say 39, this will be 46, but we're going to stay in this one because the liquidity is just so much better, which essentially means the prices we're going to trade in and out of are going to be much more to our favor. We're going to save a lot more money. So I won't bother opening this up. I've already set it all ready to go. I'll go back to the chart and we'll look at it there so you can see what I've done. So as you can see right now, the stock price we're going to say is 142, and 141 right here is the lowest it's been over the last year. We've almost hit it right here on Friday. So what I'm going to do is I'm going to start by selling a put at 138. So it'll be below the low of the last year, which means I got a little bit of room to the downside. But then what I'm going to do is leave way more room to the upside, the 149, which is, all the way up here. So this is kind of an area it kind of stuck around in over the course of a few weeks. So that's the bet we're going to make, that it's going to kind of drift upwards over the next 39 days. And then, as always, we're going to turn this into a $2 wide iron condor by buying the put and the call that are $2 away. And we always want to collect at least 66 cents on this trade. So tomorrow when the market opens up, we're going to go roughly $4 or $5 down on the put side and look at about $7 up on the call side. That's where we're going to start. And if we don't collect 66 cents, as we know, we can always move one side closer or both sides closer until we get to that 66 cent number, meaning I'd move 138 up to 139 potentially, or 149 down to 148 potentially, that kind of thing when I say move closer. So that is our trade for tomorrow in TLT, which is the bond market. Hello, everybody, and welcome to what I believe is an exciting opportunity. Now, many of you might be familiar with my classes up on Udemy, these 5 courses that I have on Udemy right now under the Option Trading for Rookies series. And my goal, if you follow along with what I'm teaching, is to really get you all up and trading as confidently and as quickly as possible, which is why I really believe this service I've created is the best way to get to the next level. Now, if you go to sharpertrades.com and you go to the courses page, you'll see these alerts pop up. And the option basic trade alert right here sends out 2 to 3 trades per week in real time. These are trades I'm actually making at the time I'm making them. And on top of that, it'll send you the alerts when I close these trades for the maximum profit potential, best return on that trade. Now, normally it's $49 a month, but I want to reward all of you who want to take advantage of this because you're taking my course. I feel like it's in your best interest and mine to get you kind of up and going as cheaply and quickly and confidently as possible. So go to Sharper Trades, go to courses, look up this alert, and then what happens is if you type in this code right here, basic option FB1, so when you click on this alert, it'll take you to a page where you can type in this coupon code. And for you lucky few that want to take advantage of it, I'm going to give it away for $1 for the first month, because that's how important I think it is to get up and trading as quickly as possible, or at least see somebody trading to see how it works. Now, as I said, it's only $1 for the first month. If you stick with it, it'll go to $49 a month, but you can cancel anytime. So if you want to do it for a month just to see what it's all about, great. If you want to keep going, great. But again, this is to thank you for being such loyal and studious students, because like I said, at least for me, the best way to learn how to trade is to get up and trading with somebody that's trading in real time, which I am. So take advantage of this. Go to the Sharper Trades page, type in this coupon code, and go ahead and get this for only $1 for the first month and see what trading looks like in reality. And you'll get up and trading, I believe, quickly and confidently, much quicker than just trying to learn it through book smarts. So take care, and please continue on with this course. Thanks.